Hi everyone, this is Jacob with Coppercoin Financial, and today we're going to talk about tax comparisons, income taxes between the various entities, LLCs, S corporations, C corporations, sole proprietorships, things like that. So I think the best way to do this is just to jump right into an example and walk you through the various steps in taxes. So we're going to start off with the single scenario that the business itself made $100,000 in net income. And this is excluding any kind of wages to owners or anything like that. So, which will be applicable for corporations. So, and you'll see it on the screen here. Again, we're going to be a little bit different today because I kind of want to be a little more clear with this and show this comparison. And it's going to be easier to do it in this format than my regular whiteboard format or some of those other semi-animated picture ones. So we're going to just go with this. Sorry, it's going to be a little boring and monotonous. There's probably not going to be a lot of action, but of course there's tons of action in all my videos, right? But we're going to go with this. So back to that example, net income for the business, $100,000. As you can see, that's the same for all these kind of comparisons. Next, we're going to do for corporations, you have to pay wages, right? S corporations and C corporations, some of that regulation from the IRS says that you have to pay yourself a reasonable wage. And we'll kind of get into reasonable wage probably in another video at some time. For now, we're just going to assume that a reasonable wage in this case is $50,000. We're going to make an assumption that we're filing all on the cash basis, so that and that we're some kind of high cash kind of a client, kind of a personal service industry, whether that's construction or marketing or YouTube, producer, entertainer. Or something like that. Somebody that doesn't have a lot of fixed assets. You don't have your own like giant building or anything like that, or millions of dollars worth of equipment. This is for the kind of the solo or small team kind of tax. So, and this is going to assume that you are the only owner, and to make it kind of a little more simple. Of course, it wouldn't be that much more difficult otherwise, but just kind of want to show you if it's a sole owner. So, long story short, we're back to our example then. So, net income $100,000 for the corporations. We're going to pay those owners $50,000. Because we're running it through payroll as wages and salaries, there's going to be payroll taxes, and that calculation is going to be 7.65% of that 50, which is $4,125. $4,125. Wow, if I can learn how to talk, we'll get through this. So that really gives us the net income before any kind of business taxes as $100,000 for the sole proprietors and LLCs, and then $45,875 for the corporations. Okay, next is, well, with C corporations, we have business income tax. So the business actually pays the income taxes. And businesses in 2019 is 21%. So automatically we have $9,634 going to taxes. We're going to assume there's no other kind of taxes or tax breaks or anything like that. We're just going to say, to make the comparison as simple as possible and understandable as possible, we can do that. If you want to learn more about some of those tax breaks, reach out to us and we'll help you with that if you're a C corporation, or if you're any kind of entity actually. So that's where we're at. So net income after taxes is the same for the three entities except for this, and then for the corporation, the C corporation, we're going to be at $36,241, and you can see that there. We're going to assume because it's a cash business, we're going to pay out all of that cash to the owners so they can use that to pay their bills. So LLCs and sole proprietors are going to get that full $100,000. S corporations are going to get an additional $45,875, and then C corporations are going to get an additional $36,241. So now we're going to move on, and all of that's going to now we're going to look at the individual owner's income tax return, Form 1040 for the federal piece. We're not going to look at state taxes, just federal. States vary from state to state, so ask us about your specific state, and we'll look into it for you and figure out what's best. But from a federal perspective, this is where we're at. Income taxes, total income is going to be $100,000 for the sole proprietor and LLCs, and then the S corporation and C corporations are going to be different. So S corp is $95,875, and C corporation is $86,241. Now, those self-employed people is what the IRS classifies LLCs and sole proprietors as. They get an automatic income adjustment, and we're going to adjust their income down to $92,350. So, S corporations and C corporations, we don't get any kind of break there, or they don't. So they're just going to come straight down, no adjustment to their total income. That calculation we can talk about later, but that's how it is. The next deduction we're going to get is for S corporations. When they make a qualified distribution, that actually is not considered income. It skips through the self-employment, and now we got to take it as income. Okay, and then the C corporation, nothing. So the next deduction we're going to talk about is the self-employment deduction. So for those sole proprietors and single-member LLCs, well, even for any LLC, you get a deduction for your self-employment taxes. And so you get a half that deduction. So in this case, half that self-employment tax is $7,065, and so they'll get that deduction. Okay, and because we're talking about personal taxes and how all these flow through on your personal income tax, there's going to be either an itemized or a standard deduction. There's an or there. Today we're going to assume everybody's going to take the standard $24,400 deduction, and we're going to assume that they're married and filed jointly. And if that was different, if they were single, it'd only be like $12,000 something, and if they have other filing statuses, it would also be different. But this is for, just to make the example kind of uniform across, so you can see, we're going to assume $24,400 married filing jointly. Okay, the next step is going to be the qualified business deduction. So for sole proprietors, LLCs, and S corporations, this is a new deduction that comes through from the Tax Act, Jobs and Tax Act of 2017 from Trump. And for sole proprietors and LLCs, that's going to be $13,707. And then for S corporations, that's going to be $521. This is roughly a 20% deduction on some of your pass-through. The calculation takes there's a few different ifs and thens kind of scenarios through that calculation. So you'll want to reach out to a tax professional like myself or somebody else to get that specific number for you. But in this scenario, that's the deduction. So for total deductions, sole proprietors and LLCs have the same amount, $52,822. An S corporation, you get $75,395 in deductions, and then the C corporation just gets that standard deduction, $24,400. So that brings your taxable income down from that original amount. So your taxable income is $47,178 for sole proprietors and LLCs. For S corporations, it's $20,480. Pretty sweet qualified distribution there, deduction. And then for the C corporation, their taxable income is $61,841. I've gone ahead and calculated the various income tax liabilities that that would be due and payable. If it hadn't already been paid, would be $5,273 for sole proprietors and LLCs. The S corporation would be $3,825, $2,070. I got ahead of myself. And then for the C corporation, income tax would be $7,033. So you can see that already the income tax has varied quite a bit. So Social Security Social Security and Medicare, or self-employment and FICA taxes, those are all kind of the same. That's what that all is. That's 15.3% for the sole proprietors and LLCs. They get no break on that. So that's other than that, other self-employment deduction of $14,130. The S corporation gets a small break on that because they also get that pass-through income, and or they don't get a break. They get taxed on that, $3,825. And that was actually withheld on their paycheck, because they're a W-2 employee, and so they get that withheld on their paycheck throughout the year. And same with the C corp. That's why they're both $3,825, and that's because of the withholding on the paycheck. So their personal tax liability on their personal income tax returns, sole proprietors and LLCs are $19,403. The S corporation is only $5,895, and the C corporation, their total personal tax liability is $10,858. And the IRS requires you to pay those throughout the year. So if you're not making estimated quarterly payments, or you're not a W-2 employee, you need to make some quarterly payments. So the total taxes paid is what we want to look at here. This is both your personal, what you paid on your personal income tax return, and if you're the C Corp, what you paid, that 21%. So total taxes paid, again, for the LLCs and sole proprietors, is going to be the same, $19,403. The S corporation is $10,020. Remember, we had some payroll taxes due earlier, and no income tax, whereas the C corporation has both. You have your personal tax liability plus your payroll taxes of the corporation plus the income taxes of the corporation. So, and this is all just the federal, and they pay the most of $24,617. Again, estimated quarterly payments are an important part of this. If you're a sole proprietor or a member of an LLC, you need to make estimated quarterly payments. What that really means is you need to look at how much money you've made and estimate how much you're going to make for the year, and kind of estimate. It's all estimated, right? The goal is not to have additional fees due at the end of the year. The IRS and law states that you need to pay as you go, as you earn money, you need to pay your taxes on that. And if you don't, then the IRS charges you interest and late fees. So make sure you're paying your estimated quarterlies if you need to. If you're not sure if you need to or not, reach out to us and we can help estimate that for you. And let you know where you're sitting. It's better to pay probably a little bit too much taxes and get a refund at the end of the year than end up paying those late fees and interest. So let us reach out to us and we can help you with that. The last thing I want to show you is kind of the personal cash flow. So we started $100,000 of net income for the business, and then how much that actually flows through after the tax impact. So the sole proprietor and LLC, they get $80,597 coming through. The S corporation actually gets the most cash after tax at $89,980, and the C corporation with the least cash after taxes of $75,383. And you can have those effective tax rates down shown here too. So you can see which entities in this example worked out the best and which ones didn't. Now, S corporations are a really good option. I did make my example in this way, just kind of show those small business owners the advantages to being an S corporation. But again, there are also disadvantages. So make sure to reach out to either myself as a tax professional or a CPA or somebody in your area that you trust and can walk you through these things to kind of show you what to do. Again, follow us on Facebook, like us on Facebook, subscribe to our YouTube channel, and we'll talk to you later. Thanks, guys. Bye.